Well, we're in an economically changing environment all the time. We talk about this in our classes, in our seminars, in our private confidential meetings, that the economy is always changing and you need to be aware of what's going on. Hat tip to David Campia for this wonderful illustration because the Federal Reserve is out to pop the asset bubbles. We've talked about the everything asset bubble. Stocks are already taking it, probably going to continue taking losses. Bonds, of course, we've been talking about the fact that no one wants to be in bonds for a very long time, and we were at 0% interest rates. I mean, they've gotten really nowhere to go but up, and now they're coming after real estate. So let's just talk about it. We're in the rental business. Let's talk about our business. This is why we're in the rental business. Now, peripherally, we're in the real estate business. Now, we like to see our properties go up in value. We put mortgages on them, and our tenants pay these loans off over a long period of time. But we always have an economically changing marketplace. Our businesses, because a lot of us have other businesses. Now, I sell real estate, and our business goes up and down. We're very interest rate sensitive, and when interest rates are low, business is very good. But we always run in cycles. Every business runs in cycles, and that's why we have this real estate, and we have it in rentals. We have properties that we rent out. We bought real estate, and we're using them and letting other people use them as a place to live, and they send us an income. Let's talk about what's going on in the marketplace, and we're going to see why we're in the rental business. We already have properties, or maybe we're going to be buying some properties, because I do think we're going to have a great opportunity coming to us. Housing permits are literally collapsing. Now, a lot of the builders already have homes coming to market. It took them much longer to build their properties than they thought. They're buyers, because none of this is spec homes. They're not building spec homes. They're building homes that are already sold. But a lot of the people that they've sold these properties to can't qualify at the new interest rates because the new mortgage payments have gone up $800 to $1,200 a month. That's a really significant number, and no one's building anymore. So we have no supply coming to market. Now, when you have people saying, well, there's all kinds of inventory coming to the market, that's really not supply. That's just people who are just bringing their homes for sale. We don't have any additional supply. The only way we get additional supply is we have to build supply, because we have an existing stock of homes, and we have to bring in new homes. We have a 4 to 5 million home shortage across the United States. It's pretty severe in Florida, Texas, and Arizona. And when you see permits like this crashing, means that there aren't any new supply coming to market. There's going to be lots of properties that have been sitting off the market, waiting to come to market, and they're going to be brought forward pretty quickly, because honestly, if you think we're going to have a rising interest rate environment, you're going to want to get your property in the market as quickly as you can. So that's going to be for housing inventory for sale, but not supply. So let's not confuse those two together. So we have housing permits literally falling, and that's both in multifamily and in single family. So home buyer sentiment is just dropping off the cliff. It's collapsing. It's gone to an all-time low. Get lower sentiment, we're going to be getting a new chart, because it's at a negative 78. This tells us that no one is going to be buying a home anytime soon. That means that the first-time home buyers have been out of the market, are definitely out of the market. And of course, we have millennials coming of age. They're going into their family formations. So they're not going to be living with mom and dad. They're getting married and they're starting to have a family. And that's going to put a whole new pressure on housing all across the country. Here we are. That sentiment is crashing. You can see that the home builders are starting to get concerned themselves. I would suspect that in the coming months that this is going to go back down towards zero. But they're getting concerned. As we pointed out before, their buyers that they built homes for may not qualify because the payments have come up so dramatically. Here in Phoenix, they're starting to really curtail how many properties they'll sell out of a subdivision. They're not bringing new developments forward. So we may have some existing inventory, but we're going to sell that existing inventory, and then we're going to become a severe housing shortage. And this is going to go over to not just home buying, but we have the worst consumer confidence in history. So not only new home buyers are out of the market, virtually all the consumers are out of the market as well. So this means they're not going to be going to the movies. They're not going to be going to entertainment. They're not going to be going to the bars and the restaurants. They're going to start saving their money, and they're not going to be buying. It's going to be kind of like a self-fulfilling recession, and this is coming. So we have the worst consumer confidence in history, and that means that no builders are going to be building into this. So where is everyone going to live? Now we have no new supply. Now don't confuse inventory coming up for sale with new supply, because the only way you can get new supply is to have builders bring new supply on. Now here in Phoenix, Arizona, we have a severe shortage of homes. We wonder where everyone's going to live. So we as landlords and investors that own properties are going to have a very good business. Our business is going to be booming because we have a lot of people that need a place to live. When you have a recession, my brokerage business is going to slow down, but my rental business is going to boom. This is why we buy rental properties, is to give us an income stream that comes through regardless of what's going on in the economy. It's a very, very steady stream, and it becomes a lifeboat for a lot of people. You know, when we come to our seminars, we're going to talk about we have really, really good years, particularly in the real estate business. We seem to run in like threes. We have 3 really, really good years. And everyone comes into the business, they're brand new, they think, oh my gosh, what a great business. And then they find out that we're cyclical. And they haven't saved any money. They've gone out and bought all new cars and new furniture and got themselves in debt, and business slows down. Well, we all have peaks and valleys in our business, but having a consistent income coming in all the time is what we do this for, because everyone needs a place to live. Now, we're in the rental business. When we get into hard time, when we start to see recession, we start talking about people laying people off, maybe not as many hours worked. We want to start concentrating on better tenants. Rather than maximizing the rent, we want to maximize the tenant. Now, how can you do that? Well, you can start looking for higher credit scores. Now, higher credit scores go hand in hand with getting payments from your tenants. You know, that lowers the risk for it. Higher credit scores also means probably less maintenance and less management problem. Now, if you have any concerns in your area, you might asking for higher cash reserves from your tenants. So when they're making their security deposit and first month's rent, we want to make sure that they've got more money in the bank. We want to make sure they have a cushion in there. You can work with your management company as to what is best. How can we get a better tenant? One of the things that we're looking for here at my personal portfolio, we think that we need 3 times monthly rent. So if you're renting for $2,000 a month, we'd like to see you making $6,000 a month. So maybe we raise that up to 3.5 times. So if the rent's $2,000, maybe you need to make $7,000 a month. And this just makes there's more cushion. It makes for a better tenant for us. We want to make sure that the income coming in from our properties is really more secure. And you can do that. Talk to your property manager. They'll certainly have some ideas for you. I'm with West USA. You are more than welcome to reach us. We do this on a daily basis, where you can call me at the corporate office. You can reach me at michael@michaeldeville.com. My very, very best to you guys. Bye-bye now.